Hello friends, the taxation with respect to capital gains are always quite complicated. So people have several doubts with respect to claiming exemption from capital gains. Whether can I invest in a property and get an exemption, or can I invest in any other things and get a capital gain exemption. So in this video, I'm going to talk about section 54 and 54F, that is investing in residential house property and claiming the exemption from capital gains. Welcome to Aarti's Tax Info. So section 54 and 54F. What is the difference between section 54 and 54F is what I'm going to tell you in this video. So first, section 54. So when I'm selling a residential house property, so I'm owning a residential house property and I'm selling a residential house property. So what can I do to claim the exemption from capital gains? So I can purchase a residential house property and there are few conditions to be satisfied to claim the exemption. First thing, the asset whatever I'm selling, the residential house property, should be held for more than 24 months. So it should be a long-term capital gain. Second, whatever property I'm going to invest in future should be purchased within stipulated time period. That is within 1 year before the date of selling of my residential house property, or within 2 years after the date of selling of my residential house property, or if you are going to construct a new property, then the construction should happen within 3 years from the date of selling of my residential property. So for example, when I'm selling my residential property on 1/4/2024, then the new property which I'm going to invest should have been purchased within 1 year before this date, 1/4/2024, or the purchase should have happened after 2 years. That is, the date of transfer is 1/4/24. So after 24, within 2 years from the date of transfer, or when the construction is going on, then 3 years time period is available. So these are the things to be noted while purchasing a new property for investment purpose. And the property what I'm going to purchase should be in India. Definitely it should be in India. And if I'm not able to invest in the property within the due date of filing the return. What is my due date of filing the return? My due date of filing the return is 31st July. So for this financial year 23-24, the due date of filing is July 2024, 31st July 2024. So when I have sold a property during that financial year 23-24, I should have purchased another property within this 31st July 2024. If I am not able to purchase within that due date of filing the returns, then what can I do is I can invest that amount in a capital gain account scheme. So what is capital gain account scheme? You can go to a nearby bank, any public sector bank, and you can check with the people there in the bank and ask for a capital gain account account. So you can deposit that amount, whatever is your capital gain, that amount can be deposited in that scheme before the due date of filing the return, that is 31st July 2024. So if I deposit that amount, what can I do with that? So you have a time period, you have deposited within the due date, and with that amount, you can purchase the property within the time period, whatever I told you, purchase within 2 years or construct within 3 years, that amount can be taken from this capital gain account scheme. So these are the things to be noted. So what is the total amount I should invest to claim as an exemption is whatever capital gains I have earned. Say, for example, if my capital gains is 50 lakhs, then I have to invest in a new property, the entire 50 lakhs or more than that. So if I am investing a lesser amount, say 20 lakhs or 30 lakhs, then the differential amount, 50 lakhs minus 30 lakhs, the 20 lakhs will be taxable to long-term capital gain taxes, that is 20% plus cess. So this is relating to section 54. That is, when I am selling a residential property and I am investing in a residential property, I can claim this exemption. But once you have invested in the property, the new property you should not sell within 3 years. So in case if I am investing in the property, say September 2024, then I should not sell that property within this to September 2027. So within the 3 years, you should not sell the new property, whatever you have invested. So if I'm selling within the three years period, then the entire amount will be again taxed to the capital gains. Also, the amount whatever you have deposited in capital gain account scheme, that also should be utilized only for the purchase of the property, and you should not utilize for any other purpose. If you are utilizing it for any other purpose, then again that will become taxed at long-term capital gain tax rates. So now section 54F. What is the main difference between section 54 and 54F is, in section 54, what we do is we sell a residential house property and we invest in a residential house property to claim the exemption from capital gains. But in section 54F, I am selling any other long-term capital asset other than residential house property. Example, I'm selling shares in the company, I'm selling a land, or I'm selling any other capital asset, and I'm investing in a residential house property to claim the exemption from capital gains. This is the main difference. All other conditions, whatever is applicable for 54, applies to 54F as well. The time period for the deposit in capital gain account scheme, the time period for the purchase or construction of the property, and the property purchase in India, everything whatever I told for section 54 applies to 54F as well. What is the only difference is the property, the residential house property. When I'm selling the residential house property, I can own any number of house property and purchase another house property in section 54. But when I'm claiming exemption under section 54F, when I'm selling any other long-term capital asset, I should not own more than one residential house property. Say when I'm selling some shares in a company, I own one house and I'm going to invest in another property to claim exemption, then that is allowed. But when I'm selling shares in the company, I own two houses already. Then, if I'm investing in another house, then the exemption is not applicable. So, at the time of transfer of shares or any other long term capital asset, you should not own more than one residential house property. This is the condition for claiming exemption under section 54F. So, these are the main differences. And now, from this financial year 2023-24, the maximum exemption limit for investment is given at 10 crores. So, more than 10 crores, if you are investing in any property, it cannot be claimed as exemption. Only up to 10 crores can be claimed as exemption. So, whatever doubts you have in relation to this exemption from capital gains, you can ask in my comment sections. Thank you.